Hey guys, Czar here. Good morning to you. Happy Thursday, March 27th. Here is the daily frame about 3 minutes away from the open on New York. It is 9:27 or so. NASDAQ, S&P, and Dow, guys, we have technical down days again after a big bearish engulfing candle yesterday, and down day on S&P and down day technically on the Dow. Marginal bullish bodies for now on S&P and Dow, but the NASDAQ, the instrument that I focus on, is a marginal bearish body for now and looking like we may want to go a little bit lower here into the open, but we'll see. We're just below balance here, guys. Actually had around the 2 standard deviation bands on the 1-minute charts of NASDAQ and S&P, but pretty narrow range here, quite frankly, until we get here in the open. So that really doesn't mean a whole lot to me in terms of extension yet, although that can change fairly dramatically here on the open. Here's my trading grid, guys, daily frame. You saw that chart up there with the break below yesterday's low, bearish engulfing yesterday, looking like we want to resume some more weakness here in the context of this correction that we've had in the broad market. The 30-minute chart, guys, down here on the left-hand side is sitting down at a support zone from Australia here, guys, where we sold down into the opening of Australia last night and then into Asia, started to rally all the way back up again to this kind of key area here from New York yesterday. Spent some time there, sold down into the European Open, right back to that range again, and rallied back up again to the top of that range. This range is not particularly huge, but it's fair. It's 120 points or so right in through here, the space that we have to deal with. And now we have tagged in the pre-market this piece again, and looking to really fill this gap potentially if we break down below. We actually hit the midway of it yesterday quite violently, but then rejected back up. No doubt there are a bunch of players, institutional, retail, and certainly some algos sitting in there, taking advantage of the idea that gaps are sometimes filled and getting in a little bit early for the rebound. And that actually prevents the gap from being completely filled. But that can change in the next few minutes here, quite frankly. And the 1-minute candle is done, guys. There's the 1-minute open range, 40 points for the NASDAQ, and the S&P is 5.5 points. That's nothing to write home about, guys, on either of those. But we'll be watching to see how this develops. I will not be jumping all over anything. Just be really patient here. So far, rebounding from this zone down here, pushing up a little bit higher above the open range, but into negative moving average configuration coming into the pre-market. Looking decidedly weak here, guys. Not a whole lot going on here, guys. We've dropped below open range on both the S&P and the NASDAQ. We are beyond 2 standard deviations, though, on VWAP, and just kind of finding a little bit of support here for now. So just grinding around here, guys, looking for some structural integrity, really hanging around down here below the 2 standard deviations at those support zones that we looked at. And pulling all the way back here, guys, towards the open range on the NASDAQ. All right, guys, so now we have pulled back, tagged the open range. This is just a marker. It's not a live trade idea, just doing some measuring. This big candle makes it very tricky. All right, guys, sell stop. I'm tossing the coin on this. Sell stop. Stop above, just inside. Tricky. Really counting on the bull, and I'm in, guys. Really counting on the bulls having weak hands here. It is not a no-brainer by any stretch of the imagination. And now it's the waiting game. Aggressive entry here, guys. No question about it. And I am out, guys. That is a 1R charge to start the day. Aggressive entry and an aggressive stop, but I felt it was worth the coin toss with that very bearish daily candle. It just didn't work out this time. A routine business expense. Have an amazing day, guys. Thanks for being here. Appreciate you.